Welcome back to my channel. I'm Nate Lind, the online business broker, and I sell websites and online companies like realtors sell homes. We're going to continue with our business valuation series here, and I'm going to take you through my spreadsheet that I'll do when I'm reviewing somebody's financials and their business when they're asking me about a business valuation. I'm going to show you the spreadsheet that I use on how to figure out the multiple aspect of business valuations. We've been covering all about the multiple so far in this video series, and then in the next series, I'm going to talk about doing the analysis of your earnings or your seller discretionary earnings, which is what we use on the marketplace website closers. So I'm going to open up a spreadsheet. This is a spreadsheet you can request. Just click on the link in the description below, and I'll get you a copy of the spreadsheet so you can go through this and do a self-assessment if you'd like to walk through it yourself. Or if you're over $200,000 in earnings and more than 2 years old, I'd be happy to do a free business valuation for you. If you're smaller than that, one of my associates on my team will help you with it. So I'm going to walk you through a spreadsheet of all the different factors that I work on, that I look at, that I review, I'm trying to understand, and that my buyers on my marketplace would be looking at as well to figure out, is your multiple in range with the industry? So we start with this. It's a self-assessment, whether you do it or I do it. After that part is done, another part of the business valuation is I will compare it to other like businesses in the industry that you're in as well and see if you're high or low, and just add some extra color and flavor to it as well. But this is something you can do as kind of the DIY part of a business valuation yourself. And we're going to jump right into this and go through what a business like maybe yours looks like and how I'm assessing it. This particular business is an e-commerce business. They are selling products on Amazon and Shopify and other marketplaces. I've already had a number of conversations with them. I understand a lot of the aspects of the business, so I can whip through this pretty quick. This is one that I've already done. I've had some back and forth with the seller as well, and they've given some thoughts to some of the strengths and weaknesses of their business as well. And this has given them some ideas of some things that they need to work on between now and the time that the business is listed and goes up for sale, that can bolster the business and help its multiple. So we're going to hop right in here. And this first one, we've got the historical profitability trends, and they've got a great profitability trend. It's growing massively, so I gave them a 4 here. The next one we have is revenue stability. Very, very stable because it's growing. Again, a big fat 4. Love it. The next one we have is the likelihood of bank financing. This is going to be a larger transaction. It's going to list for over $10 million. And there's a little bit of a challenge right now in the marketplace for getting financing over $5 million. Between $5 and $10 million, it's kind of it's a little bit tougher. Over $10 million, we can start to get financing from private equity firms. This one I think is going to be kind of tough. I was a little harsh on this one and gave them a 2. For a variety of factors. One, their financials, they don't have a quality of earnings done yet for these bigger transactions. Some of my clients, I recommend they get a quality of earnings done so we can have like really crisp and clean financials available for the buyer to be able to get bank financing. That would be a huge lift on this one. And also the financials themselves, they've had 1 year, I believe it was like 2 years ago, it was a little bit soft. So they haven't had just a perfect track record of growth. And some private equity firms, they don't like that because they'll be wondering, is there a chance that this thing will come back down? So again, I was a little bit harsh on this, but I think a 2 is reasonable given their situation. The next one is risk in the business model. Is this an essential business or is it selling non-essential stuff? I put this one kind of in the middle low side as well. I gave them a 2 on this, that there is a little bit more risk in this than it would be, like, let's just say a vanity item like a health and beauty product. Those are almost always in demand, recession proof. The next one we have is a history of recurring income. They are starting to get some recurring income. That's actually really picking up in the last couple of months, but they don't have like 2 years worth of recurring income historical growth. So I gave them a 3. It's a little bit better than the middle of the road, but not as high as it could be. Next one, annual contracts or guaranteed revenue. They don't have any guaranteed revenue. This is all point of sale and now beginning to get some recurring revenue. I'm actually going to modify that. I think that's probably more like a 1 right now. Length of time in business, it's been around for a while. More than 4 years. I think it's past 5 years, so I give them 4 here. The macroeconomic conditions, they're not great right now. So outside of the business, there's other economic conditions that is a little bit outside of the business's control, but we still have to deal with it. So I'm giving the current macroeconomic condition a 2. Profit margins, they're really profitable. They're way over 25% profit margin. They're smoking it right now. I gave them a 4. Customer concentration, they don't have any customer concentration issue. They've got tens of thousands, hundreds of thousands of customers probably at this point. Give them a 4. Quality of financials, including verifiable add backs. Their books are pretty tight. They've got good bookkeeping. It's on QuickBooks. They've got a lot of personal add backs and personal expenditures in it. They're doing a lot of travel. They've got a lot of like other miscellaneous expenses that are tax deductions, but not necessary to the business. And the problem with that is some lenders don't like that. Some lenders don't want the headache of going through receipts to prove that, and so they disallow it. So I give them a 3.5. That's probably being a little on the optimistic side. It's probably more like a 3 or maybe even a 2.5. If they got a quality of earnings, that would make this thing really shine. And a quality of earnings it's not like a full audit. I'm glad I brought that up. We never do full audits on companies. Never recommend our clients do full audits before going to sale. The best that you really need to do, the highest caliber, is under a full-fledged audit. It's called a quality of earnings, and then underneath that is usually a financial review. But this is just having a third-party CPA or accounting firm verify the financials, and they sign their name on their it's an opinion letter basically of financials for a buyer or a lender to be able to then feel comfortable lending money to. In our sales and marketing and industry section, we have marketing upside and upside potential. So marketability and upside potential, gave them a 4. The degree of automation, they are getting better at this. It's still pretty dependent on the sellers themselves, so I gave them a 2. This is also like something you can do to just delegate the business more and have more automation done within the business, meaning like human capital, people doing things or systems doing things, that would have increased that score. The sales and marketing material in place, they've got all that. They've got great marketing material. They got great websites. They're doing really good in there. Zoom in just a little bit more. Our next one is the company branding. They don't have really any branding. The company's like a stealth bomber. There's like hardly any information about it. It's just they're just selling products. Like the products are getting out there and are being sold pretty well. But there's no like product brand. It's not like a Clorox or a Tide, for instance. It's completely opposite. It's a no-name brand or a series of no-name brands. The projection is looking really good, especially the last couple of months. I had a conversation with them where they were like, I don't even know if we want to sell. Like, this thing is going so well. Like, maybe we should just hold on to it. That's exactly the perfect time to sell. Like, when you don't need to, when you don't have to, when you kind of don't even want to. That's when buyers pay you the most money. Barriers to entry, they have a lot of barriers to entry. This is not an easy business. People try and fail at this all the time. So I gave them a 3 on this. What they could have done to be a little bit better is have some more intellectual property and have some trademarks and some branding. That would have made this even harder for somebody to try to duplicate or replicate them. Our next one under the business history section is diverse revenue streams. So they're fairly one-dimensional. Their advertising is leading to 1 or 2 marketplaces. I believe it's a Shopify store, and they've got some recurring revenue in the back end of it. I don't think there's even any Amazon sales going in on this. If there was an Amazon, just significant amount of Amazon sales going on here, I would bump this up a little bit, but I believe that that's not the case here. And we would go over this with a client. I'll go over this again and again. I've gone over this before. This one's a little older, so I don't remember off the top of my head. I have to go back to my notes. The seller's interest in transitioning or ongoing support, they're very motivated and interested in making a large deal happen, which absolutely requires long-term support. Sometimes it can be as much as 2 to 5 years, and they're on board with that. If they're going to get an 8-figure payday, you bet they're on board with that. The current revenue retention, if it's dependent on the seller's involvement, not terribly. Actually, I take that back. Right now, it is more so than not. So I gave them a 2 here, and I know they're working on this as well. This is one of those things. They looked at this and like, oh crap, we need to do a bunch of things here and there to like get this score up so we can get a better offer, which is incredible. Like that's exactly what I want to see from my clients. I know they're working on this, but the time that I first did this, they still had some heavy dependence on them, the actual owners, specifically in the marketing, which that can be pretty challenging too for an e-commerce store. Someone who's doing like all the Facebook ads and doing all the customer acquisition, that's a very high skilled skill set. And it's hard to replicate. Buyers get a little panicked about how are they going to be able to keep that going. The next one is if there's data available for the products and services performance. There's tons of data. There's CRMs, there's other systems of records, Shopify carts and other places where you can get a ton of data. It's very strong. It's very transparent. There's payment gateways. There's a great audit trail for all of this. So I gave them a 4. Skilled support staff in place for growth. They're working on this. A lot of the growth for most of these lower middle market companies still depends primarily on owners. From time to time, I'll see a gem where the owner is not really involved in the growth, but that's very, very rare. So I think that kind of comes to the territory. Buyers understand that, but to the point where you can put some growth-focused leadership in a company, that's great. But you don't have to. It's a total myth that you have to have this big team to sell these companies. It's totally not true. Under operating systems, we've got inventory. They don't really need any inventory. The way they work directly with manufacturers, and they've got a really good relationship with those manufacturers. So the products are shipped directly from manufacturer to consumer, and they don't hold any inventory, which is ludicrous. It's incredible. Assets, technology, website in place. They've got great technology. They've got systems set up. There should be no problems whatsoever being able to transition this over. I wouldn't say they have a ton of proprietary technology, but what they've got in place is it's moving and shaking the business in a very, very good way. So I gave them a 4 on this. That might be a little optimistic. They might have only really earned a 3, but I've been, kind of conservative in some other areas. We'll see. I'll go ahead and edit this one real quick. Operating systems in place. They're working on this again. They showed me quite a bit of what they have. Most companies don't have anything here, so the fact that they've got anything is a good thing. Manufacturing, they have great manufacturing relationships. The facility is just incredible. What they're able to do and how they're able to do it with their partnerships with the manufacturers is just unreal. So I gave them a 4 on this. Location is super easy to relocate anywhere. These particular sellers are in the Northeast. You could be anywhere. There's a 3PL, manufacturers, everything's online. You don't need any physical location. No problem whatsoever. So let's see. Let me zoom out now. Total multiplier, I gave them a 2.93. This was like the middle ground of where I think this business would get offers in. So I tend to be a little bit conservative here. They wanted to go out to the market at a higher multiple, and I was totally cool with that because it's an awesome business. So we ended up listing them or getting ready to list them at a 4x multiple, and that's just where my clients want to go out. I like to have this conversation with my clients ahead of time just to set their expectations. A lot of times we don't get the number that we're thinking, and sometimes we get better numbers. The deal is done when a buyer is really interested and excited about the business and they want to take over. It's really just a significant supply and demand issue. There's also not a lot of businesses for sale right now that are really sexy and growing and have great value to them. So I have no problems pushing the boundary with them. And this is what I do with my clients is I'll go through their business and I'll give them kind of the pinpoint of where I think the middle of the market will trade, but then there's standard deviations high and low as to where the market may come in at. And then why I say the market is buyers. So if we're at close to a 3x, pushing to 4x is definitely, I think, within reason from a listing price standpoint. And then we'll just see what buyers have to say. I would expect that we're going to get offers between 3x and 4x multiple of trailing 12 months earnings for this business. And that's what I told them, and they were excited about that. And we're going to push the envelope and see what happens. So this is an example of what your multiple might look like if you do an assessment for yourself, and also the business valuation process that I would do for you if you reach out to me. Again, you can click on the link below. Thank you for watching. If you found any value from this video, please give me a thumbs up, click on subscribe, share it with a friend. You got a buddy that you've been chatting with about business valuations and you're curious what they think about it. Share this video with them. Feel free to reach me at the contact information below if you'd like to get your own business valuation. And if you've got any questions, and by the way, if you want this spreadsheet, absolutely click on the link below to get this spreadsheet. I'll get it sent over to you, and you can go through this process yourself. Thanks for watching.